Hello everyone, welcome back to another video. Today we're talking about medical and dental expenses that you can claim on your tax return. How can you claim them? Where do they go? What form do you need for them? And what are all of the different variables when it comes to claiming medical costs on your tax return? I'm going to go ahead and jump on the tax form and show you guys what the actual form looks like and how you can put the medical expenses on your tax return. So we're jumping on the actual form on the Schedule A. So it does look something like this. This is the actual form itself. If you check the PDF of the form, it's very similar to this. Of course, it won't have some of the line items that are here in my tax software, but the Schedule A form exactly is a replica of this. You'll have your medical and dental expenses. You'll have your taxes that you pay, usually your state income tax, your real estate tax, your other personal property taxes, your mortgage interest, your charity, your casualty and theft losses are very unusual to see on the return, but if you have, they also get itemized here. So the form itself looks exactly like this, but we are talking about today medical and dental expenses. If you would like to see other sections of this form, how to completely do them, I would highly suggest that you go ahead and subscribe our channel, because we will be making videos on other sections of the form as well and teach you guys step by step on how to properly do and itemize your deductions. So starting off with medical expenses, the only catch with medical expenses is that the IRS does not allow you to claim everything, so it is capped. The cap is anything above 7.5% of your adjusted gross income is given to you in medical expenses. So if it's lower than that, then you won't be able to claim anything. So if you see on the form itself, usually you will see medical and dental expenses, of course, unreimbursed, as you see on line 1. They need to be unreimbursed, meaning that if the insurance company reimburses you for anything, do not put that on your tax return. If you get audited and they ask you for receipts, you won't be able to prove them, which is a really dumb move to do. So make sure only claim expenses if they're unreimbursed. If you've gotten money back from the insurance company, then you shouldn't be getting a deduction in the first place, because you've already gotten the benefit, you've gotten your money back, no deduction for that. So make sure to put only unreimbursed expenses on line 1 for medical and dental expenses. Now, once you go ahead and put your dental and medical expenses, you'll usually get like I say, the cap is on line 3 here. So let's go ahead and actually play a scenario here. I'm going to go ahead and enter, first of all, let's go ahead and add some income. So right now I have no income on this tax return. It's a dummy return. I need to go ahead and put some income on there to get an adjusted gross income. So let's go ahead and quickly do that. And maybe let's add a W-2 income of around 240,000. That should go ahead and flow onto our adjusted gross income on line 11. As you can see, 240, same number goes there. When we go back to Schedule A now, you see that that number flows on the Schedule A form. So now we have the 240 here, and the 7.5% of the 240 is 18,000, meaning anything above 18,000 will be given to you, and anything underneath that will not be given to you. So this is the key element to understand when you're doing itemized deductions and when you're claiming medical, because you're going to be using DIY softwares. I'm pretty sure you add your medical expenses in them, and then you think, hey, my tax return hasn't changed, my refund hasn't changed, what's happening, why am I not getting any medical expenses? Well, this is the answer to that question. Your adjusted gross income might be really high, so the 7.5% of that, of course, would be higher than your medical expenses. So let's go ahead and assume here that we have, let's say, $15,000 in medical expenses. So you'll see that I don't get anything if I'm underneath that $18,000. So let's go ahead and now bump that number up to, for example, $25,000. Let's say you had a surgery that you had to get operated, and then you had to pay out of pocket. So in that case, you see that that additional number does flow on your Schedule A. So this is the entire science behind medical expenses. It's not complicated. It's pretty much what you can claim and what you can't claim. So if you have, Like I said, if your amount is above the 7.5% of your adjusted gross income, you will be able to get whatever the higher amount is above that. Let's talk about some of the medical expenses that you can claim, which I have here is doctor visits, of course, all of the doctor visits you can claim, surgery and operations, x-rays, MRI scans, prescription medication, but no over-the-counter unless prescribed by a doctor. Insulin, that is included without even prescription, hospital services and ER visits, lab fees and diagnostics tests. So these are just some of the examples. You can check the detailed list on the IRS website, of course. Insurance premiums. Now, let's talk about insurance premiums for a second because that is important. So if you are paying for insurance, right, if it's through your employer, then it's probably pre-tax. And if it's pre-tax, then you cannot put that under the itemized section. That is key. So if you have it through your employer, it's already pre-tax. That means that the benefit has already been received on your W-2. So you cannot put the same number again here. But let's say you don't have insurance through your employer, you are self-employed. In that case, your number would not go here because I'm going to tell you what happens in the case if you're self-employed, then it's a little different. But yeah, if you have insurance you're paying yourself, it's not covered by an employer, then you can itemize that. But if it's through an employer and if it's pre-tax, then it can go on the Schedule A. Now, if you have insurance through your employer and it's post-tax, then it definitely can go on the itemized deduction section. So if you're a self-employed individual, your health insurance can be 100% deducted. That does not go under itemized because itemized deductions does get limited. Let's say you cannot go above standard, then you lose the value. So in that case, IRS does allow you to deduct 100% of the premiums that you pay for yourself and for your children, your dependents. If you're self-employed, that goes on the Schedule 1 as a above the line deduction. So that is another video for another topic. For this video, I just wanted to let you guys know that what expenses you can put here. Also, eyeglasses, contact lenses, exams, hearing aids, batteries, hearing aids and batteries included, wheelchairs, walkers, canes, and even travel. So travel for medical purposes is also deductible. Right now, as of the making of this video for 2025, we're not sure about the number that is the IRS is giving you. But for 2024, the number for the miles was 22 cents per mile. So let's say you travel 1,000 miles, you'll multiply that by 22 cents for 2024. For 2025, we're going to have to wait and see what that number comes out. But whatever that number is for the miles that the IRS will give, you just have to multiply the number with the miles that you traveled, and then you can add that number again in the total. Because usually what you can do is you can put the total which goes on Schedule A. DIY softwares would ask you several questions. Hey, did you spend money on this? Did you spend money on that? This and that. The ultimate number as a total will always flow on your Schedule A anyway. So, of course, DIYs operate in that way, but they want to ask you everything they can and then come up with that total number. So, yeah, and again, special needs therapy, speech, physical, occupational therapy, special education tuition, only if prescribed for a learning disability by a doctor also is included in there. So yeah, there's other expenses as well in there that you can claim under the medical expenses umbrella. But this is how you basically claim them on your Schedule A. I hope this video was value to you. You now are confident and know how to claim the medical expenses. No matter what DIY you use, or you decide to go to a professional, the science behind the medical expenses will not change. It is exactly this. So I hope this video was of value to you. If you want to see more content like this, then of course go ahead and subscribe to our channel. We're making videos like this every single day. The goal is to educate you guys to do your taxes the right way and to understand the tax forms as well and the science behind it. I'll see you in the next one. If you've watched this video till the end, then I really thank you for your time and consideration. I have one last proposition for you. A lot of the taxpayers are using DIY softwares because they're not comfortable with the pricing that their professional is charging them. A lot of the people are trying DIY softwares and making mistakes, claiming deductions they shouldn't be claiming, missing deductions, claiming credits that they're not supposed to be claiming. All of this will hurt you in the long run, and if you get audited, then you'll get into big trouble. This is why we want you guys to contact us and get a consultation free of cost and ask questions that you want to ask us. We want you guys to get the best value at the lowest price in the market. We match your DIY price, what you've paid last year, and give the value you deserve. This is why we want you guys to switch from DIYs to hiring consultants and professionals like us at the same cost that the DIY software charged you last year. Go ahead, call us today. The link of our website is in the bio. Contact us and let's have a chat about your taxes next year.